the CPI numbers are out, and let's quickly take a look at the numbers for April. The April CPI combined inflation rate has come in at 4.83% versus 4.85% in the month of March, and we were penciling in a 4.80% is what we were penciling in on the CPI number. Now, April CPI food price inflation has come in at 8.7% versus 8.5% in the month of March. So a slight uptick in the food CPI print that was also penciled in, but CPI rural inflation has come in at 5.43% versus 5.5% in the month of March, and the CPI urban inflation has come in at 4.1% versus 4.14% in the month of March. Joining us right now is Rajani Sinha, who's the Chief Economist, CareEdge Group India. Hi, welcome to ET Now.
Yeah, hi.
Ms. Sinha, based on the numbers that have come out, firstly, how are you reading into this number? We were penciling in a 4.8%, on the CPI print. And since this is the second month of first quarter of FY25, what are you penciling in for this quarter?
So the CPI number was very much on expected lines. We were expecting around 4.8% also. And going forward also, we are expecting CPI inflation to remain above 4.5% or so. So broadly for this quarter, I would say we are expecting more than 4.5%, around 4.6, 4.7% inflation.
Right. Also, we are joined by Garima Kapoor, who's the Economist and Senior Vice President, Elara Capital. Hi, Garima. Welcome. Garima, the numbers are out. Even if inflation has eased off marginally in the month of April, it will be the 55th month in a row that it would be above the RBI's medium-term target of 4%. What is likely to be the stance of RBI going ahead? Even though in the June meeting we are expecting the rates to remain unchanged.
Broadly, I don't think RBI's reaction function any longer is being dominated by domestic prints on inflation on growth. While there are considerations, I think the global considerations, especially the starting of the global rate cut cycle, especially by Fed, is what is probably dominating the reaction function. The recent incoming print from US, both on jobs front as well as inflation front, has not been very encouraging. So as the rate cut expectations in US get pushed ahead, the rate cut expectations in India are also likely to push ahead. So I do not think, our expectation is that we do not think RBI, CPI, MPC will cut rates at all this calendar year. We expect the first rate cut to be pushed well next into first quarter of the next calendar year. That is quarter 4 FY24 or quarter 1 FY25.
All right. Joining now is Swagata Bhattacharya as well, independent economist. Hi, Swagata. Do you concur with what Garima is just saying about the rate cuts? Is that when you also penciling in the rate cuts to come in by RBI?
Of the limited amount that I heard of her, I agree that if not at least in the next 4 or 5 months, I think they will have to wait till at least the monsoons are passed. So that's one, how food inflation behaves. This inflation print was also a surprise because, remember, and particularly core inflation seems to be about 3.25%, which is very low, which is sustained at a very low. And this is despite very high increases in the prices of gold and silver, so which is a big surprise. So it seems as if core inflation is coming down significantly. So if food inflation begins to come down, then we might begin to see something of the order of October or probably more likely a December cut. But again, this depends on the prints of inflation going forward.
I'll stick with you here. You mentioned food inflation. Only when that comes down is when we can really, have a path or a roadmap towards the, the rate cuts. But in the last policy meet in April, the RBI Governor Shaktikanta Das had highlighted concerns over food prices uncertainties, and the upward momentum in the food prices is expected, to limit the fall in the headline inflation rate as well. But when do you see the food prices really moderating? Because we are also expecting a decent monsoon, right?
Sorry, is that for me?
Yes.
So food inflation will depend on the extent, to a large extent, on the extent of the spread of rainfall, the temporal and spatial dimensions. If the rains are good, for the onset of the Kharif and the Kharif sowing, and then the Rabi sowing beyond that. So if that portends a good soil moisture, the spread of rainfall, then we are likely to see a fall in food production. But however, global prices still remain quite elevated. Particularly now with the heat wave going on in the Southeast Asian economies, the prices of edible oils, the prices of rice, some of the other cereal crops still are influencing food inflation coming into India. So I think the critical part will be the rains. And but as of now, given RBI's projections, forecasts for quarter 3 and quarter 4 at 4.6 and 4.7%, that to my mind remains problematic, because unless they see that overall headline inflation begins to come down significantly towards the 4.2, 4.3% mark, they will be very cautious in their rate stance.
Right, Rajni, I'll come to you then. The continued proactive interventions by the government on the supply side, coupled with the recent reductions in LPG and fuel prices, how well positioned are these to counter any potential upward price pressures?
I think I agree with Saugata. The main concern right now is on food price inflation, because core inflation has been going down. So if the monsoon is good and we see the food price inflation moderating, then we could see RBI coming and cutting policy interest rate. While the global factors will also be critical, but I feel on the domestic front, given that core inflation is already under control, if the food inflation comes under control, which could happen in the next few months if the monsoon is good. But having said that, yes, the climate related risks have aggravated not just in India but globally. So that's something on which we would remain cautious. But if the monsoon is good and there are no more climate related risks to Indian food production and the food price inflation moderates, we could see RBI cutting rates. And I feel that could happen towards the end of this calendar year, that is the last quarter of the current calendar year. But also at the same time, I would like to highlight one more thing that we need to be watchful of is what's happening to the global commodity prices apart from crude oil prices. Because we are also seeing that industrial metal prices have started going up. And we have to note that the data that is coming from China is also showing that growth there is turning out to be better than what was being feared earlier. And so is the case with US. And as a result, we are seeing global commodity prices inching up slightly. So again, that is something which I would be cautious of.
Finally, a final word from you, Garima. What are the things to watch out for? What is your word of caution? Global commodity prices, food inflation, deflationary trend, which is aided by RBI stringent policies that is aiming to bring down the CPI back below the 4%. By when do you expect that to happen? If we take a base case scenario where the monsoons turn out to be decent.
For the full financial year, assuming a normal monsoon, we are at a CPI of 4.6%. Two factors have to be noted here, as Rajni pointed out. One, of course, is incoming data out of China that is giving some wing, especially with resurgence in base metal prices. And second has been the volatility of crude oil. While crude oil has corrected from a high of $19.91 a barrel to about 84, we'll have to be watchful of that trend, especially as you enter the winter season towards the third quarter of the current calendar year. The other thing that you also need to be probably watchful about is going to be, notwithstanding the headline monsoon, it's important to see what are the vagaries on intertemporal and spatial distribution, as Saugata pointed out. Because what ends up happening is that while headline is good, extreme weather patterns, particularly for last 2 calendar years, have meant significant crop damages. But on the positive front, the government of India continues to intervene through policy measures. For example, you have duty-free imports, especially in terms of oilseeds. Likewise, for certain pulses, you have an export ban for sugar, you have an export ban for paddy, particularly basmati, and you have an export ban for wheat. So in a way, it is insulating India from any steep increases that we are seeing globally in terms of food. But at the same time, we'll have to be very cautious about what intertemporal and spatial distribution means, because this can, although the headline monsoon can be great, it can lead to very negative feedback loop when it comes to your food inflation and hence its impact on the other manufactured food items as well. So I would be very cautious about the incoming prints at least till the last quarter of the current calendar year, and hence I probably stick to my estimate that I don't see RBI cutting rates this calendar year.
Right. no rate cuts this calendar year. That's what Rajani has mentioned. But thank you so much, Swagata, Rajani, and Garima. Thank you so much for joining us. On that note, we will have to let you go. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.